Checking in on the market rundown. So we had a bit of a weaker open with the weakness from the end of the day yesterday following through into today. And today was a very choppy day, back and forth. The hourly time frame bounced. We were looking for a lower high to be set. We formed a higher low. We double topped at resistance. We broke that resistance by 6 pennies and then rejected. And then we held support at the end of the day. So look at this little channel where we have a double top and a double bottom. And 279.24, 280.24 is essentially the range that we're watching as we head into tomorrow. If that breaks bearish, we're still pulling back on the daily, and we're watching our higher low of 276.35. That's our most important short-term support level on the daily time frame. And of course, if we break bullish, we're looking back at our high of 281.31. So very indecisive today, and it was marked by the end of the day seeing IWM dump here, and some of the emerging markets are showing some weakness, which is worth paying attention to, because they've been leading the way up. So the daily higher low for IWM is 156.06, still holding that level at this point, but the RSI is coming off of overextended, and if we lose that higher low, we zoom out to the weekly and we look for weekly consolidation for a higher low to form. Keep an eye on IWM. There is a possibility it's going to act as our canary in the coal mine, as it has done in the past. QQQ holding up much stronger, 170.71 is the higher low on the daily, and we have a similar hourly pattern to SPY, but it broke bull at the end of the day. It did pull back as well, but not a double top. It's a clear little higher low and higher high move, trying to make its way back to the recent high. XLF has the big upper wick the past 2 days, so that's definitely showing profit taking, and the support level here is 26.36 that is currently holding, and if that level breaks, we're looking down at 26.22 and 26 even. So again, that would be a loss of the daily higher low pattern and a bit of a shift in momentum, and we would then be looking at the weekly key support of 25.34. VIX getting a little bit of follow through, not very notable today, and as far as I'm concerned, anything under 1730 is still just a daily lower high. We had a little bounce attempt at 1520 that the bulls are just barely breaking, but have to get over 1730. Otherwise, this bounce is just a lower high, in my opinion. I'm watching the exponential resistance, the 12 and 26 period, which have also continuously rejected the price. The bulls are going to have to close over that and see a bullish cross for any kind of meaningful upside. Oil is trying to bounce. We're just looking for a lower high to form on the 4-hour time frame for oil after the big dump. Still hasn't set that lower high yet, but there's a ton of space up here. Anything under 57.47 is just a 4-hour lower high. Inventory report tomorrow to be keeping an eye on. Natural gas, congrats to the bulls temporarily. They got follow through first thing over 2782, but that 4-hour RSI was the highest that it's been in a very long time, and it led to a 3% dump. So at this point, we have to be cautious of the weekly bear flag, because the daily chart gave us a higher, or actually the daily chart hasn't even confirmed the trend change. It broke the lower highs. We need a higher low and a higher high to confirm the daily trend change, and if we can't pull that off, it is a weekly bear flag. So need the daily trend confirmation with a higher low and higher high to fend off that potential bear flag on the weekly. Otherwise, that's going to remain a possible bear flag. So keeping an eye on the emerging markets tomorrow to see if they're going to continue to push the way down. The hourly RSI on IWM, including extended hours, is approaching oversold. So if we do see another leg down tomorrow and break the low of today, we'll be watching for an hourly oversold bounce in IWM. And generally, the first hourly oversold bounce attempt from a very strong bullish move gives a solid bounce. And we can see in the past on this move since the December low, we hit 30, RSI went back up to 70, dipped below 30, back up to 70, and here we are right at 30 again. So keeping a close eye out for those RSI levels. And looking at the 4-hour time frame, it's entirely possible that we hold this support, bounce to cool off the hourly RSI, set a right shoulder, and this is the 4-hour time frame. And if we were going to reverse, it might look like that head and shoulders. So all depends on what the hourly RSI and what 156.06 support can do tomorrow as to whether or not it can hold. Hope you have a good night. We'll see you soon. Here's some stock humor. Hey everybody, this is Charting Man Dan, and I'd like to share with you today an indicator that I've been developing for the past couple of years. I feel like it's one of a kind here, really in the world, so I'm very happy to have been working on it and would like to share it with you. A lot of times I get questions, messages saying, hey Dan, you have a really attractive voice. I'm just wondering how you pick stocks throughout the day. And through this little short video, I'm going to show you some of the methods I've been working on and some methods that you can use as well in your own practice and hopefully become a better trader. So let's get into it. So I like to call this group of indicators the goat indicator. And as everybody knows, goats are the best and smartest animals, so I like to incorporate them into my trading strategy. And you would be amazed at the insight that a goat can provide you heading into the trading day. So each day I'll come down here in the morning and I'll approach the goat and I'll ask them how they're feeling about a specific stock. So I'll say, hey Lyra, how do you feel about Tesla today? And she's not interested here in the moment because she knows it's a weekend and she knows the market's closed. So she's smarter than that. She knows I'm wasting her time at this point, and her time's pretty valuable. So we'll see what the other goats have to say. That's a rooster. That's George. He's more interested in silver these days. But we've got Nancy and Edna here. And Edna is all about Tesla, big Elon Musk fan. And she was all over it on the bounce that occurred back on the February dump. There were some big gains to be had there. And all it takes is just listening into the goat, putting your ear near their mouth, and you will hear slight, subtle, vocal recognition of what you are talking about, and they can indicate a bullish or bearish position. So I'll get this information, I'll run back to the house real quick, place an order, and reward them with some nice treats. And that brings me to my next indicator, which I call the green indicator, which I will give you an example of here in a moment. So this is a very simple indicator called the green indicator, where I have one sprig is a bull and one sprig is a bear, and I will present them to the goat and ask the question, you know, what do you feel about Apple today? Is Apple a bull or a bear? And whichever one they take first, see, that's a bull. So we know Apple is bullish heading into Monday. And there's going to be a pullback. You can see the bear gets eaten as well. And we've got Lyra here now. Lyra's going for the bull. So that's a clear indication. We got a double goat bull heading into Monday. So we'll be looking for some upside on Apple. And we'll head on to the next indicator now. So this is another indicator I like to use. I call it the processed indicator because it allows the goat to process all the information overnight, digest it, and it's a non-emotional reaction here of their interpretation of the chart. So here we've got a SPY chart. I lay it out the night before. I come back in the morning, and you can see here, a lot of people call this goat poop, but I feel like that's a little crude of a term here, and it's a resource that can certainly be utilized. And you come out here, look at this SPY chart. We've got a double formation here at the top of the Brexit, right before the Brexit boat, and there we got the dump. Look at that. That's a triple bottom rare formation, and that's exactly where the bottom bounced up, and now we're heading to all-time highs. So this was a perfect indication leading into the Brexit bounce that let us know that we were going to have new all-time highs in the very near future. I've never seen a triple bottom there, and that little cluster certainly an indication of the strength that was to come on the bounce. You doing some studying? Reading up on the chart. Not a good girl. Yeah, getting in on the action. See, this is you can't duplicate this. This is absolute dedication. I've trained them for 3 years to do this, and they're looking at all kinds of indicators here, and they're going to have some good information in the morning. Hey everybody, so this is our resident nerd bird, and she is the expert in commodities. And what she will do is she will study a chart and tell me what she feels is the longer term outlook of the chart. And we call her Nerdbird because she's always got her head buried in a book or a chart. And she was really bullish on gold at 1,000, and you can see what happened there. She was telling me about gold every day. And all it takes is just listening really quietly to the animal, and she will tell you what you want to hear, and she's ready to go. So that's Nerdbird, and that's an indicator for commodities and a resident expert here on the farm. So this is another indicator I like to use. This is the chicken coop here. This is the chicken egg indicator. So we've got some wonderful chickens here that like to give us some tips into some stock. So I'll come in here every morning and see if there's anything on the agenda here. We've got nothing on there. Let's see here. We've got a, oh, that's a Twitter. Okay, so that's a bull. You can see that's a nice healthy egg. That's Twitter's icon is a bird, and when you got a bird laying a Twitter egg, that is a bullish indication. And let's see what else we got in here. We got one more here. That's a T-VIX. Now look at these comparisons. So we got a Twitter egg, and a T-VIX egg compared to each other, and you can see how much smaller that T-VIX egg is. That is a bearish indication. You don't want to be playing T-VIX on a downtrend, trying to catch that bounce. And you can see the big difference between those two names right now. And we've got Edna supervising over here. She's making sure that the chickens are current and up to date on the financials. We got earnings seasons coming up, so Edna certainly keeps them on tap with what to be focusing on for the week. So that's the chicken egg indicator. So act now, and for a limited time offer only, I will send you for just $500 a copy of my new book, How to Trade Like a Goat, and also your very own baby goat in the mail to help you with your trading career. I appreciate you watching. I hope you have a wonderful weekend. And again, remember, be the goat. Hey, big girl. How you feel about Baba? Is Baba bullish? No? Baba boo? By you. Baba boo?